Presentation on valuation of imported and exported goods for levy of custom duty, presented by Pujita, MCom Final, MPM Government, First Grade College, Karkala. Valuation rules for custom duty, terms used in commercial parlance. Invoice. This is the basic commercial document showing particulars regarding description of goods, quantity and unit price, discount and net price, names of consignor and consignee. Invoice. It is a basic commercial document which shows details of goods such as quantity and unit price, discount and net price, names of consignor and consignee. Next, packing specification, giving particulars of the contents of each of the package in the consignment. Packing specification gives contents of each of the package in the consignment. Certificate of origin, a certificate issued by the competent authority in the country of manufacture giving the extent of the manufacture in that country. Certificate of origin, it is a certificate issued by the competent authority which gives this certificate for manufacturer in that country to make manufacture. Bill of lading, a negotiable document given by the carriers of the cargo giving particulars of port of shipment, number of packages covered by the consignment, marks and numbers on the package, name of the consignee of the goods. A bill of lading is a document of title, a receipt for shipped goods and contract between a carrier and shipper. It includes port of shipment. Port of shipment, it is designated by the buyer, a sales agreement. In a sales agreement, number of packages covered by the consignment, they must mention in that bill how many packages are they sent to consignee, marks and numbers on the package. The shipper marks his packages with some information identifying the shipment so that the consignee can know what the shipment is. The marks and numbers can have any of below the consignee's name and address. Name of the consignee of the goods. The consignee is the party to whom ownership of the goods will transfer when the cargo is released at the destination. A consignee must be named on a bill of lading. Air consignment note. It is a document corresponding to bill of lading in case of cargo imported or exported by air. It is a document which is related to bill of lading. It is used when goods or carriage imported or exported by air. Indent. It is a document showing the particulars of the consignment for which the buyer has placed an order with the supplier. Indent, it is also a document. In this document, it contains particulars of the order consignment which was given by buyer to his supplier. It normally includes full description of the goods. It is a detailed description of the goods you are shipping. It states what your goods are, what they are made of, and what they are used for. Unit price. The unit price is the price for one item or measurement such as a pound, a kilogram, or a print, which can be used to compare the same type of goods sold in varying weights and amount. Mode of payment. A way of paying for something such as cash. They were only accepting credit or debit card as the mode of payment. Quantity required. The actual quantity of any item of work or materials which is required to be performed or furnished in order to comply with the contract. Delivery instruction: an order by a client to a broker as to where the broker should place securities or other assets once they are received from a seller. Quotation: it is a document which indicates the price, the terms and other conditions on which the seller is willing to supply goods to the buyer. It is a document in which it includes price, terms and other conditions in which supplier is willing to supply goods to his buyer. Letter of credit: this is an instrument delivered by the bank intimating the seller that the buyer has instructed the bank and the bank will according to this instruction pay the seller of the goods. The letter of credit is an instrument which is delivered by the bank. Buyer has instructed the bank to intimating that instrument to seller. Based on his instruction, bank pay the seller of the goods. Mate's receipt: a receipt given by the first mate of the conveyance certifying the total quantity of the consignment received on board the vessel or the aircraft. A bill of lading is issued on surrender of the mate's receipt. Mate's receipt is issued when goods are placed on board ship. After verification of quantity and condition, the bill of lading is prepared and issued based on mate's receipt. Boat or lighterage charge: sometimes the vessel is unable to get a berth alongside the quay in the harbour. The goods are then transported from the ship to the shore by boats or lighters. It is considered to be an operation that primarily deals with the transfer of wet and dry container between ships of differing sizes. Technical terms relating to value in the course of import or export. Export factory price: it is the price of the goods as comes out of the factory. It includes cost of transport, production and manufacturer's margin of profit. Export factory price: it is the price includes cost of production and also manufacturer's margin of profit. Free alongside: it is the cost at which export goods are delivered alongside the ship ready for shipment. It includes export factory, local freight, local taxes. It is a cost which is ready for shipment. It includes export factory, local freight, local taxes. Free on board: free on board means stage at which the goods are placed on board the conveyance carrying the vessel. It can be said to include FOB. It is a charge of goods when it is placed on board to the ship. It includes free alongside, loading charges, export duties. Cost insurance freight: it is the cost at which goods are delivered at the Indian port. It covers cost of goods. Sometimes there is referred as CFC also. The duty is payable on the basis of value of goods. CIF: it is a cost at which goods are delivered at the Indian port. The duty is payable on the basis of value of goods. Such value tariff value fixed by the central government by notification in the official gazette. The value fixed under section 14 subsection 1 of the Custom Act 1962. Tariff value. In some cases, tariff values are fixed by the central government from time to time for some specified goods. Once the tariff value of any commodity is fixed, then the value for the determination of duty is the tariff value. Custom duty may be percentage which should be applied to the tariff value for determination of duty. Tariff value is fixed by the central government from time to time for some specified goods. Once tariff value is fixed for any commodity, value of determination of duty is the tariff value. Custom duty may be a percentage which is applied to the tariff value for determination of duty. Value when tariff values is not fixed, the values of the imported goods and exported goods shall be the transaction value of such goods as determined in accordance with the rules made in this behalf. When tariff value is not fixed, then that time transaction value of imported or exported goods are considered on the basis of rules. Valuation of imported goods. For the purpose of determining the custom duty, the value of such goods shall be deemed to be price at which such goods are ordinarily sold for delivery at the time and place of importation in international trade. The necessary condition is that the seller and the buyer have no interest in the business of each other and the price is the sole consideration for the sale. The valuation of imported goods. To determining the custom duty, the value of such goods shall be deemed to be price at which such goods are sold for delivery at a time and place of importation in international trade. But in this one condition is there, that is the buyer or seller shall not have interest in business of each others and price is the sole consideration for sale. The treatment of loading, unloading and handling charges. Honorable Supreme Court ruled in the case of Ipro Limited that landing charges to be added to the value of goods should be based on actual charges incurred and not a notional charge of 1% has been provided in the Rule 10 subsection 2. The Honorable Supreme Court ruled in the case of Ipro Limited landing charges to be added to the value of goods should be based on actual charges incurred and not a notional charge of 1%. Transaction value. The transaction value is the price actually paid or payable for the goods when sold for export into India, adjusted in accordance with the provisions of the valuation rules. It is the price which is actually paid or payable for the goods when sold that goods to export into India. The conditions subject to which transaction value is acceptable. First, the sales in the ordinary course of trade under fully competitive conditions. The sale must be in ordinary course of trade where fully competitive is there. The sale does not involve any abnormal discount or reduction from ordinary competitive price. The sale does not involve any abnormal discount or reduction from ordinary competitive price. The sale does not involve any special discount limited to exclusive agent. The sale does not involve any special discount limited to exclusive agent. No part of the proceeds of any subsequent resale, disposal or use of the goods by the buyer flows back directly or indirectly to the seller. The buyer didn't return any part of disposal or use of goods to seller directly or indirectly. The sale price is not subject to any condition or consideration for which cannot be determined. The sale price is not subject to any condition or consideration for goods or which cannot be determined. The buyer and seller must not be related to person. The buyer and seller must not be related to each other. Following expenses, if not already included, to be included in the value of the imported goods: commission and brokerage. Commission and brokerage, it will not include the buying commission, that is the commission paid by the importer to his agent abroad for determining the price of the goods. Packing cost, it will include cost of container, value of the other packing material and the labor charges. Value of the goods and services provided by the importer. The royalty and license fees payable in relation to the imported goods. The share in the sale price of the imported goods payable to the exporter either directly or indirectly. The share price in the sale price of imported goods payable to the exporter either directly or indirectly. Cost of transport up to the place of importation. Cost of insurance premium of the goods up to the place of importation. If the cost of insurance is not known, then 1.125% of the FOB value will be taken as insurance cost. The loading, unloading and handling charges associated with the delivery of imported goods shall no longer be added to the CIF value of the goods. The loading and unloading and handling charges associated with delivery of imported goods shall no longer added to the CIF value of the goods. Thank you.